I think we can all agree that 2024 was a pretty rough year in terms of the real estate market here in Ocean City, and 2025 isn't shaping up to be any friendlier. In today's video, I want to do two things. Number one, revisit the predictions that I made in early 2024 to see where they landed, and let's make some predictions for 2025 based off of all the data I have to hopefully help us get a leg up. Now, if you haven't watched any of my prediction videos before, I really break it out into three different categories. And these are the things that impact the market the most. And that is rates, mortgage rates, inventory, and pricing. Which direction are they going to go in? Which one influences the others? And so much more. So, as far as 2024 predictions, inventory, I had predicted that we would not get below 200 active listings, but we also wouldn't go above 280. Now, the highest level of inventory that we saw during 2024 was 276. So I was extremely close to my cap of 280. Now, I thought we would end the year at about 225. We ended up around 220, but the low point during the year was 217. So that was a correct prediction. Now, I explained the rationale for that in that video last year. If you're curious, I don't want to rehash it too much. I want to keep things moving. But prices, I thought that they would increase in the 3 to 5% range, right? In prior years, things were much faster in terms of price increases. And there are a lot of ways that we can look at this, right? In my monthly market updates, I look at year over year, specifically broken out for single family and condos. But for this metric, what I like to do is really look at the market as a whole instead of breaking everything down into niches. Anywhere you look, right, if anybody is talking about the expected growth in appreciation in real estate, it's done at the market level. It's not broken out by segments. So in 2023, the average sales price, the mean sales price was $1,212,000. In 2024, it went up 2% to $1,237,000. So just below what I had predicted. Again, it was a tight year. Sellers are really holding on with not much incentive or motivation to cut prices, but buyers also aren't necessarily out there with a blank check like they have been in years past when mortgage rates were lower. So on that note, mortgage rates. I didn't expect to see any rates under 6%. When we ended the year, we were just coming off the 8% highs down into the sevens, and I didn't think we would see anything under 6%. So we bottomed out very close to 6%. And obviously, there are a lot of different products, a lot of different lenders. The lowest rate that I saw at all, I actually found for a client of mine who just closed this month, toward the end of the year, was able to lock in a 5.99% 30-year, not an ARM, not an adjustable rate loan, a 30-year conventional mortgage. That was the best that I had seen, but everything else really was in the sixes. We did see things now start to peak up into the sevens, the low sevens again, but maybe things are calming down here, and I'll get into that in next week's video. So rate-wise, again, very close. I didn't think we would see many changes in the first half of the year based off of the Fed rate cut projections. And really the first half of 2024, things were very stagnant in terms of rates before we did see some breaks in the second half of the year. So 2024, I'm very content with the predictions that I made and where things fell out. And that informs a little bit of what I'm going to predict here coming up for 2025. Now, one thing before I get into that, the supply demand piece, it's one thing that the first mentor that I had in this business told me that everything comes down to supply and demand. And I won't say I laughed it off, but I felt that things were more complicated than that. However, that tends to be the driving factor, right? Inventory is at incredibly low levels and it's staying there. Unlike many markets that were able to continue to build new homes, build new developments, new neighborhoods, we can't do that. All we can do is replace what already exists. There is no new land to find. And if sellers are holding on, which they continue to do, whether that's because they believe in Ocean City, whether that's because they have a 2.5% to 3% mortgage rate, there's a ton of reasons why many sellers have no interest in leaving, with one of the big ones being it's going to be very expensive and difficult to find a comparable replacement property. If you want to move up from a 3 or a 4 bedroom to a 4 or 5 bedroom, whether it's a single or a condo, it's very difficult and incredibly expensive given that difference in mortgage rates. So inventory wise, let's start with that. I don't think that we're going to go below 200. Now we're kind of teetering on that already. As normal, we tend to start the year off at near the lowest points that we're going to see. We actually started at 204. We had a lot of homes that expired off the market at the end of the year, which tends to happen. And we ended up already jumping back into the teens, the mid to high two teens, so 215, 216 in that range. So I don't think we're going to go below 200 again. And it's going to be a very similar prediction because I expect a pretty similar pattern of sales and demand this year, barring a massive curveball. But anybody, predicting a massive curveball, I wouldn't necessarily put a whole lot of confidence in, let's say. So I don't think that we'll exceed 275 homes this year, actively listed on the market at any point. Now, I do expect more homes to go under contract than we had last year. So in 2023, 2 years ago, we had about 550 homes go under contract, and that's in the single family and condo departments. That's what I track closest. 2024, we only had about 500. So we had about a 10% reduction in the total amount of homes that went under contract. Now, we also had a 7% reduction in the amount of listings compared to 2023. So it tracks, it makes sense. So really, I think we're going to have more new listings this year as the economy maybe goes through some bumps, as we have a new president being inducted here in 2 days, and there's going to be some shakeups, I think. So I think that's a pretty safe prediction. Inventory is going to stay within those bounds, but we'll have more go under contract. Now, just for reference here, in 2019, we had 1,025 homes go under contract. It's nearly double just before COVID happened. That's what used to be normal. Then we actually saw more homes go under contract in the first 2 years of the pandemic, 2020 and 2021, before rates took that swing upwards and really slowed things down, put the brakes on for folks. So price-wise, I see no reason to alter that prediction than a 3 to 5% increase again. Let's say best case scenario for buyers, right? The market really puts the brakes on. Prices rise a lot faster than they fall. I don't see a cataclysmic event coming to where sellers are going to have to liquidate their homes here on the island. Again, it's possible. Anything is possible, but I don't think it's likely. So barring that kind of crazy one-off event, it will take time before adjustments are made across the board to really impact, again, the market-wide metrics. So 3 to 5%, I think, is a safe bet. Now, rates, again, inflation seem to be rising now. One of the Fed board members came out and said they see it falling this year based off of the results that we just had this month. It's going to be something to monitor closely. And so far, right, if I had to put this whole thing in a nutshell with inflation, the Fed thought they had inflation under control, so they started cutting rates toward the end of last year. The investment markets, bond markets, everything else said you're full of crap. I don't believe you. You shouldn't be cutting rates, right? The data is not there to support it. Inflation is still here. It's not going anywhere. So that seemed to be proven right so far. Time will tell, but that's one thing that I'm going to be keeping a very close eye on because, again, if you were thinking that when the Fed cuts rates, mortgage rates comes down, that hasn't happened now for 2 consecutive cuts. Rates have actually increased. There's a lot, again, underlying that goes into that. But short version, I think rates are going to stay in the 6 to 7.5% range. I hope that we don't exceed 7.5%. I could see a case where if one of the main prerogatives of the administration coming in is to get the financial situation of the country under control, one way to do that is to make it harder to borrow money. It means there's less spending, less inflation, so on and so forth. So there's a possibility that the Federal Reserve actually may increase rates. And if that happens, that's a whole other ballgame that we'll obviously talk about if and when we need to. But I think it's safe to say that they'll stay basically within the same range that we saw last year. There will be some peaks and valleys. The predicting when is the rate going to increase and decrease is going to be tough. But I think 2025, that should be reasonable. Now, worst case scenario, again, fiscal tightness comes into play. Worst case for the real estate market anyway, and those rates go up, those mortgage rates increase. Best case scenario, inflation actually does get itself under control. And if that happens, again, I think just like we saw in 2024, it's going to take some time. Once there's uncertainty, you need to see results, duplicated results over a period of time, period of months before you should really come out and start cutting rates again. So if that happens, if inflation truly is under control, those rates really could go back into that 6 range. They could potentially go under. Again, I don't think it's likely. So that's it. Those are my predictions for 2025. Again, so far, I've been fairly accurate in these in years past. There are some misses for sure, based on assumptions that I always try to lay out here. So I can always look back, or you can look back and point to it and say, oh, that's why. That's why it was incorrect. That's why we landed where we did. We learn together, and we grow this process until, hopefully you're making the most confident decision you can make, whether that's to buy or sell here. So thank you as always for hanging out. I hope this is helpful. If this is a surprise to you, I would love to hear from you. If you think I'm totally wrong, let me know in the comments, or reach me any of the ways you normally can, all listed in the description. But I appreciate you spending time with me today. You could be doing a lot of other things. So hopefully you found this helpful. And if you did, hit the like button. But I will see you next time.